Hello and welcome to Forex.Academy, your number one website for Forex and crypto education and analysis. In today's edition, we're going to be looking at how the markets are currently behaving with regard to the continuation in the global pandemic. This is a 5-day chart of the Great British Pound US dollar pair, where we can see the rise in price from 1.2790 to a high of 1.3170 before the pair fell back at the end of the trading on the 31st of July. Much of the move higher has been due to an overall decrease in performance of the United States dollar, and where extreme volatility crept into the market on Wednesday the 29th of August. When the Federal Reserve put interest rates on hold, but with the FOMC comments at the press conference were extremely rubbish regarding the outlook of the American economy, and the continuation of the COVID virus escalates within the United States. The volatility continued on Thursday when unemployment data in the form of continuing jobless claims in the United States showed an increase, and more importantly, the annualized second quarter gross domestic product figure was released for the US at minus 32.9%, the biggest such drop in history. The US dollar was heavily battered as a result, giving an uplift to the pound, euro, AUD, NZD and others. This is a Dow Jones Industrial Average daily chart which shows that the Dow took a dip to just above 26,000 on the last trading day of July. It subsequently rallied to 26,482 at the close. Naturally, analysts, market commentators and traders alike are bewildered by the fact that the United States posted its biggest loss in gross domestic product in such a short time frame in history, and yet the Dow Jones remained unscathed. So what is it we can expect in the ensuing weeks? With regard to the Dow Jones, it's pretty much being driven by technical analysis, and where the big numbers such as 26,000 seem to be holding as support, and where the recent attempt to breach 27,000 failed. Therefore, we can assume this to be the resistance level. Larger sized institutions are looking at the long term rather than the short term. They believe that the V-shaped recovery is possible, and that when suitable medical solutions are found to minimize the impact of COVID-19, the American economy can quickly return to normal. However, pessimism is creeping more and more into the markets, and there is a possibility of another crash in US equities. With regard to the United States dollar, we should expect a toing and froing effect with more volatility, and where bad news will affect the US dollar performance during certain times of the days and weeks, whereby bad news regarding the UK and Europe, such as what we are seeing at the moment regarding the further lockdown measures being implemented by the British government, and whereby further outbreaks in COVID are being seen across Europe, can be considered to be bad for both the UK and the Eurozone economies, in which case you might expect to see a reversal in the Euro and British pound, such as we saw on the last day of trading for July, when these major currency pairs reversed from sharp rallies. Sentiment is playing a large role in the majors, with the USDJPY bouncing off multi-month lows as seen on this monthly chart. This is because investors buy yen as a safe haven currency. Similarly, for the USD Swiss franc pair, which has been sold heavily to a low of the end of July, as seen on this monthly chart at 0.9100. Again, a multi-month low as investors buy up the Swiss franc for its safe haven status. If you enjoyed the video, then please like and subscribe, and leave a comment down below about anything you would like us to discuss in future, or if you have any questions about this particular video. Have a great day.